Good afternoon, team. Happy Wednesday. I wanted to do a quick video. Haven't done one since last week. I was out of town over the weekend, so I couldn't get around to getting the computer set up and everything out of town. So I'm looking at the market this last few days, and again, it's just been a back and forth thing. I've been alerting on the chat. Um, Look where we're at. Look, basically, we're right here. So it's looking to me. It's looking to me like this. It's this, right? Like these last few days where it's just nothing but back and forth, chop fest. We have a big up day, then a down day. We had a big up day yesterday, Tuesday. We had a long weekend. So we gapped up and we kind of held it halfway there. I thought we were going to fill the gap today. We kind of almost did, but we didn't. I'll show you in the 15-minute. So we're going sideways. Again, we're way below the 21, way below the 50, and the 200 is way up here. I mean, guys, I mean, 370 to 280, that's 100 points away from where we kind of need to be at to kind of clear this 371 area to build this base and start going higher to the 400. So we are months away from having a sustained rally. So don't kid yourself. This is not over. This is what I was mentioning. This is the this gap down this morning. It gapped down and it got filled right away. Okay, so now we're kind of trending a little bit lower in this little channel right here. But what I'm saying here, here's the gap up. We tried to fill it, but we still have a little bit to go to 275. So I'm thinking this is gonna get filled sometime in the near future. This right here is kind of like in that same kind of borderline. I think this got filled by that little area there. But if you notice, kind of like key levels, even here.
There are a lot of
Sorry about that. I got an alert coming in. So see how that got filled in a couple of spike bars. So again, gaps gaps tend to get filled. We have this one here. We're still kind of pending. So if you notice, there's a lot of gaps, right? I mean, this is very gappy action. What happens with this gappy action is because there's a lot of volatility. The VIX is still sitting at almost 30, 29.72 right now. So there's a lot of gaps. When you have a lot of gaps, there's a lot of indecision, a lot of emotion, a lot of exuberance. And when you have that, you don't have sustained rallies because you have these highs and these lows and these highs and these lows, and then you get this, and now we're getting this, but now much lower. I mean, this is not good. Okay, so don't try to come in here. Another one thing I wanted to show you. Kind of bring this over here. It's kind of in Thinkorswim. I have many watch lists set up on my other monitor because you kind of peek and look what's going on with different things. I have this for my ETFs. It's basically pretty much the whole market. This is the entire market right here. The Qs and the S&P and the Dow all combined. It's right here. This is every single sector in the market. Okay, and from what you're seeing here, there's only like 1, 2, 3, 4 sectors that are actually in a positive trend. This is see if you notice it, trend quality. This is a setting in Thinkorswim. This trend quality gives me I rank. If you notice my ranking of everything that I do on my watches about trend quality. I want to see the stocks that are moving higher, not the ones that are moving lower. So like Block. This is a crypto ETF. It's like -9. Semiconductors -1. Cloud storage -1. Oil became negative. Look at the XOP. Where's the XOP? Look at this XOP. This sucker was in the 170 range, 165, 170 range, like last week, and then it's now trending. It's now 126, and it's trending. It's at 2.66 trend quality. Let me show you here. I mean, guys, from 170 to 125. I mean, who could withstand that? Again, once it breaks the 50, you got to get out. The 21 just dash down. So what you do here, let's say you own this at the 145 range, it hasn't really validated anything. Okay, so you have a little mini base here. So you say, okay, well, 159 is my line in the sand. Once it breaks 159, I'm out. Let's say you were in this trade in the 160s, 170, right? You say 159 is my line in the sand. So you get out at 179 and 159. Look, you could have saved yourself all this and it's still going lower. And look at the relative strength line. So what I'm saying is nothing is working, guys. Nothing is working. This is TBT is the interest rate. Obviously, they're going higher. Nice trend quality. It's been going higher. 10 is the solar ETF and so forth. Just a little bit. But again, it's not like, everything, basically I want to show you, everything is down. Everything is negative. Okay, so there isn't a single sector other than like interest rates, which we know, a little bit of solar that are kind of like still a little bit positive. Let me show you those real quick. Let me put this back over here. So, right? So this is kind of working. This little base right here. Put this off here. Pinning in 21. This could be a nice entry if it takes off today's high. It could be a nice entry here. The other one that's the only one that's has a fair trend quality is because it's been going higher from here. The relative strength line has been going higher, so it's got a positive short-term trend quality. But again, it's basically below 200, and now it just took the 50. So this is still overall not a good place to be in. And the other one, ONLN. ONLN. Again, look at this. It's basically flat. That's why it's got a 1 trend quality, because it's not doing this. It's basically going nowhere. But again, you don't want to trade this. Look at the 200. Look at the 50. Look at the 20. It's just like this is. Relative strength of 17. This is the retail ETF. So again, what I'm trying to show you here is nothing is working. There isn't a single sector other than interest rates that is doing anything positive right now. Just don't step into this market. Don't step into this. Because you're gonna get chopped around. You're gonna get this. You're gonna get this sideways action when you have all this huge down. Then you got a couple updates, and you get a huge gap down. Then you get some up. It's like back and forth. The same thing you had over here. We had this back and forth. The 21 was holding. Everybody was positive. Great. The 50 is coming down. We hold here. We meet the 50. We take it. Now here we go. And then what happened? We broke the 21, and we're trading down here, still below 21. So now to break the 21 and be above 21 is still below these levels here. So these levels here now also resistance as well as the 21. So again, we're going from bad to worse, guys. That's basically what I'm trying to say. We're going from bad to worse. This isn't a market that you want to be heavily actively trading. It just every channel is being broken to the downside. I have no words. It's just step out of the way. Just basically step out of the way. I got stopped out on almost everything. I made a little bit of good money yesterday on the nice uptrend, and then once it started reversing, my stops got hit, and that's it. All I have right now, I have a little bit of ARLP. I have a little bit of there because I was buying this breakout here above the 50. Just kind of held, so I'm still holding it. This is my line in the sand, so I'm giving it another 1.5% kind of thing. AVT right now, again below the 50. I was trying to catch the bounce of the 200. Should not have done this because 44 is a resistance right here, so I'm not gonna get that much of a play here. But my stop was really tight, so it's going sideways, not doing anything. The ones that are working that I added, that I pointed to you guys, Go. This is nice. This is nice trend, right? Hitting the upper channel. So what do they do when it hits the upper channel? it's kind of selling off a little bit. Again, less than 1%. So I'm perfectly fine keeping this. And then the 21 kind of be my guide here. It's got to fall down. I bought it somewhere around here, maybe 40 and change. So I'm up. Not great at a point and a half or so. But again, it just something that's working. I mean, you can see it's working. You can see it's kind of like, once the 200 it broke upwards in the 50, it hasn't reversed ever since. Even this huge down day here that it blew down, it blew away the 50. That the 200 held, a while here, and then it just gapped up and it kept on going. And the 21 has been a nice support. So I'm keeping go until it breaks the 21. That's basically it. And then the other one that I have is Vivo, actually up in the day, up 2.5%. I bought it yesterday, right here. My line in the sand was Friday's close, so it's kind of holding. Since I have nice positive gains on here, I have a trading stop of 3.5% on half my position, and the other half, I'm letting the 21 kind of be my line in the sand if it breaks. This 28.72 could be also a hard stop if you're in this. Again, it's doing its best to kind of like trend upwards. If you see the let me look at here. Let me look at the weekly here. See, it's kind of going up a little bit. The 21, see, it's pointing higher, and the 50 is kind of like angling a little bit to the high side. So obviously the 200 as well. So there's momentum up, guys. That's what you're looking for. You're looking for stocks that have momentum up. You don't want to see. Let me look at Square. You don't want to see this. You don't want to see stocks where like the 200 is pointing down, the 50 is pointing down, the 21 is kind of pointing down. It's got a relative strength rating of 4. It try to hit, try to get to above 100. Kind of based out right there. Every time it has a little base, what does it do? It kind of falls back down again. Every little base that it goes up into, it falls back down. It's kind of stare, and then maybe it's forming a little base here. And then if it hits the 21 around here somewhere, you might see another drop. I don't know. You might see this. I don't think so. I don't think you're going to see this going back over here. So again, you don't want stocks doing this. Look at NVIDIA. 50 is going down, 21 is going down. Kind of broke all these low levels, 27 relative strength, 174th group out of 197. So you want to be in strong stocks. You want to be even the energy stocks. Emir was in the 1, 2, and 3, top 10, top 20. Now it's 58. Why? Because it's doing this. XLE was the other one I had. That was energy as well. XOP. Look at it. Look at this drop. So you don't want to step in here and be here and say, oh, I'm buying the low. It's going to go up now. How do you know that's the low? How do you know, this wasn't the low? I'm like, okay, it reversed back. It closed above the 50. I'm jumping in, 50 bounce. Now it's going higher. And then you have another, 15-point drop. So again, you don't want to anticipate. That's basically the gist of this. You don't want to anticipate. You want to see the reversal. You want to maybe go down to maybe even like a 30-minute, or you might even want to go to an hourly chart. And okay, let's say, okay, it's going down. When is the low? I want to look for a little base. Okay, so now I'm getting in once it clears this base, and then you can catch this uptrend. But you gotta see this clear this base here. You don't want to know that. You don't want to buy this because now it's gonna go higher. What if tomorrow you have this? Because now, okay, you bought here. This is the low, and you got this. You bought here. Okay, now it's gonna go higher, and it did. It resisted, and you gapped down, and you're back to the same spot. So nothing happened. You didn't do anything. So you don't want to buy when it's low, when it's going lower. You want to buy when it's breaking out of a little trend. So in this little bounce right here, okay, it went down. Then now, what do you want to do? Okay, I want to buy it when it breaks this little base. You look for little bases. You look for little shelves. Look for little consolidation area. Little consolidation area right here. Okay, so if it breaks right up here, I'm a buyer. You don't want to buy here. You want to buy when you see this, and then maybe fall a handle. You got the cup. And then you want to buy here, okay? That never happened, so you were out. So you say you would have bought it here at 88. It's a 73. That's 12 points. That's 15 points less. You could have avoided all that just by buying right and not trying to anticipate and trying to come in and guess and gamble. Like the same thing here. Okay, I'm buying the low here. It's going higher. No, it's building this little base here. I probably would have even put it here at 78 to get back in. And then look where it's at. So I'm digressing, but I want to get the point across. Don't step into a down market. You don't know how much further it's going to go. How low can it go? As long as it wants. How long can it go here? Okay, my God, look, we broke the 21 on the S&P. Wow, can it go further? The next day, gap down, and it stay okay. Gap down, so it's got to fill this gap. I'm buying this low here, and then you're even like a couple hundred points lower. So, how long can it go? You don't know that. You want to see. You want to prove yourself. You want to prove itself to you. So like, I'm not buying. I'm not stepping into this market until it gets above the 21, and at least this first gap gets filled. Ideally, the second gap gets filled, and the 50, and then you see this little shelf right here. This consolidation is also going to give you a lot of resistance. So you want that to get filled. You want that to be, like, you're looking at, 500 points away. So we have a long way to go. I'm saying the same thing in many different ways. Step out of this market. Step out of the way. If you're going to, dabble into little things because you want to kind of be involved, you should stay engaged. Engaged doesn't mean you're trading and you're buying, every movement of the stock. Engaged means doing this, what I'm doing right now, showing you. Look at it. Look at the chart. Look where it's at. Have limits. Okay, I'm not getting in until this limit gets filled. That's it. Put an alert, put a trend line, and just watch it. And every day do your scans. I ran my scans. I'm sending you a list of this for the week of my scan. Guys, 56 stocks. When it's normally I get anywhere between 200 and 300. 56 stocks are worthy of the scans picked up. So that means like there is not, and here it is, but it kind of coincides with this. There's nothing working. Every single sector is down. Every single. This is like, the airlines. Every single sector is down. Nothing is working. So don't try to step into this market right now. Before we had energy working, energy was working great. Look where the XLP is at right now. So stay clear. Go through that list. Go through those stocks, and then analyze what setups can potentially work and the ones that are showing relative strength. And then once we have a nice little 3 or 4 day, maybe 5 day sustained rally, you go pick up a nice little swing trade and pick up 10-15% on your trades. And then once they start hitting resistance, the 21 being the first one, and then this little shelf right here, and then the 50s coming down, look for a reversal back down again. We can still go lower, guys. This is now this low. I thought this low was gonna not be broken. I thought, okay, we put in the low, we went up here. Now we're gonna shelf out for a little bit, and then break this shelf and go lower. What do? We broke down. We broke down. We broke down. We took out this low. Now we established this low, and now we're going higher. Now, is this it? Is this the new low? Are we done? Is this the low? Nobody knows. So don't guess. Watch price action. Okay? All right, guys. Stay safe.